Hi everyone, welcome to today's webinar on understanding Brazil's main listed products, proudly brought to you by Orange Futures Singapore and B3 Exchange. I'm Linus from Orange Futures Singapore. Today, we are honored to have a team of specialists from B3 Exchange to share with us about the products in the Brazilian exchange. Without further ado, I'd like to welcome Brenda from B3, specialist in international business development and client relations for the APAC region, to introduce the team from B3. Brenda, please.
So presenting equity derivatives, first of all, good afternoon to all of you in Asia and good morning to all of us here in Brazil. It will be a pleasure to be presenting this webinar to all of you, in which we'll walk you through all the main listed products here at B3. Today, presenting the equity derivatives space, we'll have Renato Munhoz. Presenting the FX products, we'll have Rafael Tsopanoglu. Leonardo Souza will be covering the interest rate products, more specifically the DI1, which is a very important contract for us. And for commodities, we'll have Ricardo Bamberg presenting specifically the corn products. Okay. Before we get into the specifics of all the main products we have listed here, I think it's important for us to take a step back and try to give you an overview about the derivatives market in general, just for the sake of the context. So if you can see this image in the upper side of the slide, left side, you'll see this chart, which is showing us the average daily traded volume of our derivatives market, which you can see that in 2023, it was 24 million contracts, which is an amazing number. But the most interesting thing in this chart for us to understand is if we compare the pre-pandemic levels with post-pandemic levels, in which you'll see that we developed from 11.5 million contracts to almost 24 million contracts. In other words, we're more than double the derivatives volumes, and this even with all the problems related to the retail flow slowdown across all the global markets. Okay. Talking about retail flow, if you take a look at the chart right below this one, we'll see the chart that is showing the breakdown of the market share of all types of investors that you have here in B3. And going directly to 2023 bar, we can see that retail investors last year, they were responsible for 29% of all activity in our derivatives market. And this is important because we know that all the HFT firms, all the prop firms, you all love to interact against retail flow. But not only that, retail flow is very important in terms of market structure as well, because in a market where you have more retail flow, probably you have more market quality. So we can say that the Brazilian markets, they are very healthy environment. Okay. One last point that I would like to bring here is the participation of non-resident investors, which you can see in orange, that last year non-resident investors, they were responsible for 48% of our markets, and almost everything of it was carried out by HFTs. So this tells everyone how much HFTs are important for us. Okay, that's enough of me. Let's go to the speakers itself and to the topics. And the next one in line is Renato Munhoz with the equity derivatives. Thank you very much. I hope you all enjoy the webinar.
Hello, guys. Good afternoon and welcome again to our webinar. I will give you an overview on the Ibovespa Index, also known as Ibovespa, and its related futures contracts, including the standard contracts and the mini contracts. Let's begin with a closer look at the Ibovespa. With over 55 years since its inception, the Ibovespa is the benchmark stock index of Brazil. So it represents the performance of the most traded stocks here at B3. Notably, the Ibovespa is a total return index, which means that it reflects not only the price movements of the stocks, but also the reinvestment of their dividends. Currently, the index comprises 86 stocks and has a market cap of almost $800 million US dollars. Okay, it serves as a crucial indicator here in Brazil as the stock market's health and the investor sentiment towards Brazil equities. When we move to the contracts that's related to this index, we can see the standard contracts here. That's the favorite contract here for institutional investor due to its size. However, we have also the mini Ibovespa future contract, which is mainly utilized by the retail investors and the non-resident investors here in Brazil. Turning our attention to the characteristics of the standard Ibovespa futures contract, we find that the size of each contract is calculated by multiplying the value of the Ibovespa index by the value of each point, which is equivalent to 1 Brazilian real. Another critical feature to understand is the tick size, which for the Ibovespa futures is 5 points. This translates to a tick value of 5 Brazilian reais. And when it comes to the expiration, these contracts mature on the closest Wednesday to the 15th day of the expiration month. And all of the expiration of the futures contracts, the Ibovespa, is on even months. And so this provides the option for investors to have the possibility to do a calendar spread when it's necessary. All the contracts regarding the Ibovespa futures are cash settled, and the daily settlements are determined by the volume weighted average price. And the final settlement, as the expiration date, is based on the average trading price during the last 3 hours of the stock market. So now let's compare a little bit with the mini Ibovespa futures contract, where the principal difference here lies to the standard lot size and the point value. The mini contract has a standard lot size of just one contract, making it more accessible to individual investors. Additionally, the point value of the mini contract is only 20 cents of Brazilian reais, significantly lower than of the standard contract, which allows for a finer granularity in trading strategies and potentially lower risk exposure. Okay, then now we can move on to the next slide to see the impressive trajectory of the Ibovespa futures contract here at B3, which has become the most traded stock index futures contract according to 2023 Futures Industry Association ranking. The trading volume has seen a remarkable increase. As we can see in the first graph, it soared from an ADV of around 1.5 million contracts to over 3 million contracts since 2021. Moreover, these contracts are known for their tight trading spreads, as we can see on the graph at the right part of the slide, which is an indicative of high liquidity markets where contracts are almost always trading with the minimum spread visible on the screen. Finally, when it comes to market dynamics, the current intraday volatility of the Ibovespa futures stands of around 18%. However, it's important to note that there have been periods to even more volatile environment with spikes reaching as high as 40% in terms of volatility. Then I would like to say a little bit about products that we recently launched at B3. So we can move on to the next slide, please, which was the weekly single stock options. Last week, they completed 1 month since the launch, and we are seeing a fantastic performance with more than 16 million contracts daily, and the huge participation of retail investors on non-resident trading groups. We know that this is a trend around the world, the weekly options, and we can see this success in only 1 month with participation of non-resident investors is divided among non-resident investors and also the retail investors. So at the equity part of this presentation, the Ibovespa futures contract and also the weekly options are the main products that we can show to you guys. So thank you, and I would like to move on to Rafael, and he's going to present the FX products here at B3. Thank you.
Hello, everyone. Well, before we get into the details here, I would like to thank you all from Asia for joining us this call today. I'm Rafael, responsible for FX and crypto products at B3. Today, we offer a wide range of FX products at exchange. Our USDBRL Futures, which is the main product that we're going to talk about today, trades more than $40 billion per day in notional. We also have other FX futures, other pairs, just like G10 and emerging markets currencies, that trades around $100 million per day. And we also offer other products such as options on USD, BRL, crypto ETFs, and we are on the verge of launching a Bitcoin futures contract. Moving to the USD BRL futures, that our main topic today. This is a highly liquid market, being among the foremost FX products globally. We offer two contracts. We have a standard and mini contract. Both of them are the most traded contracts in the world, and they are responsible for the price formation of USD BRL exchange rate in Brazil. In the graphic, we can see the evolution of the trading activity of both contracts in notional. One thing which is particular about Brazil, unlike many countries, is that the exchange rate, which is formed usually in the spot market in other countries, in Brazil, the price formation and liquidity of USD/BRL are concentrated in the futures market, as the spot market here in Brazil is interbank only. Okay. The mini dollar contract is the second most traded FX futures in the world in number of contracts, and the standard contract is the ninth most traded contract in the world. We see, as Renda told in the beginning of the webinar, we have here high participation of individuals trading the product. So after 2019 specifically, we saw a significant increase in participation of this kind of client, which contributed to the development of the volume of this contract. Now going to the contract specification. The size of the contract is $50,000. The mini contract is $10,000. And the ticket value for the standard contract would be 25 reais, and the ticket value for the mini dollar is 5 reais. The round lot for the standard contract is 5, and for the mini it's 1. They expired in the first trading session of the month. Which is the, for example, for the April contract, the expiration would be April 1st. The trading hours of the contract are 9 a.m. to 6:30 p.m. Brazilian time. We also offer as the calendar spread for both contracts, and the price formation for the settlement price formation is every day at 3:50 p.m. to 4 p.m. Brazilian time. So this is an exchange product, CCP cleared and financially cleared product. I'm now going to some key figures about the contracts. Beginning on the top here on the left hand side, we see that mini dollar actually before that, the participation of clients I think would be more important. The mini dollar concentrates participation of retail trading and non-resident investors, with nearly 100% of the volume being day trade. The dollar standard concentrates larger trades from institutional investors, financial institutions, and non-resident investors, with almost 80% of its volume comprising day trades. Now, on the top left-hand side here, we see that the mini dollar concentrates accounts for 70% of the volume in terms of number of contracts traded, with almost 3 million contracts traded daily. So here then the number, which is almost 600 contract is normalized by the size of the standard contract, but it accounts for 3 million contracts per day. Dollar standard contract trades nearly 300,000 contracts per day, and it holds a larger open interest as well. As clients here tend to maintain positions, as we have the banks and financial institutions and institutional investors there. We see here on the graphic on the right hand side, uh, the average spread in BRL is very tight as well. Almost 100, nearly 100% of the time, the spread is one tick wide, alongside with a significant book depth. We see there are many strategies that our clients use trading the product, uh, like standard contract versus mini dollar future, USDBRL B3 futures day trade, other FX strategies between other currencies arbitrage, and arbitrage between futures and NDFs. Okay, so so here, this provides an overview about our FX offerings. Once again, thank you for your participation here on the call today. Now I'm going to move to Leonardo here, who is going to introduce the interest rate products, which is uh, uh, with more detail about the DI future. Thank you.
Hello, thank you, Rafael. Hello, everyone. It's a pleasure to be here. I'm Leonardo. I'm responsible for interest rates products team here at B3, and I'm going to cover the DI future. Okay. First of all, it's not possible to deep dive here in the interest rates product without knowing a few terminologies here in Brazil about the Brazilian interest rates market. So I'd like to introduce you to a few key words here. Okay, the first of all is the BCB, or Brazilian Central Bank. That is our main regulator, and they are responsible to do all the oversight in the interest rates market here in B3. Okay, inside Brazilian Central Bank, we have a committee that we used to call Copom. This committee is responsible for all the monetary policy decisions here in Brazil. If we look to the US markets, we can compare the Brazilian Central Bank to the Federal Reserve and the Copom to the FOMC. Okay, the Copom is responsible again for all the monetary policy decisions in Brazil. Here they used to follow an inflation target system, so they do periodical meetings every 45 days to decide about the basic interest rates that will be applied here in Brazil. And this interest rate is the Selic rate. Okay, so every 45 days, Copom does periodical meetings to decide what is the Selic rate level here in Brazil. Today, the Selic is around 11.15%. Okay, and they decide about the Copom decides about the Selic rate level. Okay. The last topic here is the DI rate. Okay, what is the DI rate? DI rate is another interest rate practiced here in Brazil, but it's calculated and published by B3. Okay, we have the DI rate methodology. The DI rate has its own methodology, and this methodology is defined by B3. Okay, by us. For instance, however, today the methodology just replicates the Selic rate. So currently we can say that the DI rate replicates the Selic rate. So DI rate is equal to Selic rate. Okay, and I'm just giving this quick overview about the Brazilian interest rates market because our main future contract when we talk about Brazilian interest rates futures contracts is the DI future. Okay, so the DI future is basically a future contract that the underlying asset is the DI rate, all the accumulated DI rates between the trading date and the expiration date. Okay, so if you look to Ibovespa futures, the underlying asset is the Ibovespa Index. If you look to FX US dollar future, the underlying asset is the USDBRL rate. But if you look to DI future, the underlying asset is all the DI rates between a specific period. Okay, all the average rates between a period is the underlying asset. So when you trade the DI future, you're basically trading the average DI rates between a specific period. This period can change depending on the maturity you are trading. So we have a lot of maturities in DI future. I'm going to show you all the maturities in the next slide. But currently, we have around 40 maturities available to be traded. So if I'm trading the DI future that expires in March 27, the period I'm trading, the average DI rate is 3 years. If I'm trading the DI rate maturity that expires in January 30, the period is 6 years. So the period that I'm trading the average rate here depends on the expiration I'm trading. Okay. It's relevant to mention that the ticker is the DI1, and then we have the maturity. For instance, the DI1 F27 is the DI1 January 27, and so on. The contract size is 100,000 BRL, so 100,000 reais at maturity. The round lot is one contract, so you can buy 1, 2, 3, 4, 5. So the round lot is only one contract. When we go to the tick size, it's very relevant to mention that the contract is traded at a percentage rate per annum. Okay, so you buy 10% and sell 11%. So you sell 15% and buy 14%. So the price quotation is a rate. Okay, and this rate is related to the average rate of the period. Again, the period you're trading depends on the expiration you trade. Okay, so the contract is traded at a percentage rate per annum, so the tick size will be as a percentage as well. So for the first 3 months, we have 0.002% as the tick size, as the minimum price fluctuation. From 4th month to 6th month, so till 5 years expiration, we have a half base point, 0.005%. And as of the 6th month, as of the 5 years, we have 1 basis point as the minimum price fluctuation. Okay, so the longer maturities, you can trade the tick size is 1 basis point. The middle maturities, a half basis point, 0.005, and very short maturities for 3 first months, we have 0.002%. Okay. Regarding the maturities that we open to be traded, we used to open all the months during the first year. Okay, so all the first years available to be traded. Between 1 year and 5 years, we open a January quarterly cycle. So January, April, July, and October. And as of the 6th year, we open only Januaries. Okay. Today, the last expiration we have available to be traded in the future is January 38. Okay, so you can trade a very long term if you want. Okay, it's important to mention that we also offer strategies. Okay. Sorry, I didn't mention the pricing methodology. The last box here is the pricing methodology. Basically, we price DI future using the VWAP methodology, so the volume weighted average price between 4:10 p.m. and 4:20 p.m. So every day during this 10 minutes time window, we capture the volume weighted average price, and this price will be the daily settlement price of that maturity. Okay, and basically all the maturities are priced at the same time at this 10-minute time window. Okay, going to the strategies, it's very important to mention that we also offer the strategies for the future. We offered the trade at settlement. So if you want to receive a DI future in the end of the day, in the price of daily settlement, you can trade in the trade at settlement order book. It's a different order book available to be traded, but in the end of the day, you're gonna to receive the DI future maturity. So you don't carry a position on traded settlement. All the traded settlement trades will be turned into DI futures contracts, okay, in the end of the day. We also offer FRA spreads, okay, so if you would like to trade a forward rate agreement on DI future, you can trade in a different order book that basically combines two different maturities. And you can also trade a div1 neutral spreads, again with two maturities combined, but in the end of the day you basically receive a position that you are div1 neutral. Okay, you neutralize your base point values of both flags. Okay, going to a few statistics, this contract is the last year was the most traded interest rates contracts of the world. If you look to a quantity metric, okay, so last year the ADV, the average daily volume, was around 3.5 million contracts per day. When you look to the breakdown of type of investors, you can see that it's a very diversified market, because we have asset managers, basically hedge funds, we have PTGs, and we have banks. It's almost 33% of banks, 33% of hedge funds, and 33% of PTGs. This kind of diversity brings good dynamics to the market, because these types of investors have different interests. So we have investors looking for arbitrage, investors looking to hedge, looking to swap, looking to protect their portfolios. So we have a lot of diversity here in DI future, and it brings a good dynamic. As a result, we can see high levels of liquidity, high levels of volumes traded every day. It's important to mention that the most traded maturities is always January's, okay? January's, April's, July's, and October's, but basically January's. As I told you, we have a lot of maturities available to be open, to be traded, but January's concentrate the most liquidity, and it's not a coincidence. Basically, the reason is related to government bonds markets. We have a very huge government bonds market here in Brazil, and basically we have two types of fixed bonds here in Brazil. Okay, LTN and NTNF. It's like if we compare to the U.S. market, it's basically a U.S. Treasury, okay, LTN and NTNF. But a lot of players used to trade fixed government bonds and DI future together. For instance, if I hold a fixed government bond and I'd like to swap this fixed government bond to a float flow, I can use the DI futures. So this is the reason why LTN and NTNF, that is the fixed government bonds, feed the DI future market. Okay. Finally, in this last chart, we have just an example of DI future settlement price. Again, we have a lot of maturities available to be traded. Okay, so we can go to January 38 today, and you can trade all the maturities. But again, the exposure of each maturity is different because the number of the days you're trading is different. So if you're trading a short maturity, you have a specific risk metric. If you're trading a very long maturity, you have other specific metric, other risk metrics. So it's very relevant to pay attention on this. Okay. I think is enough regarding the interest rates market and the future. So I'm going to invite Ricardo to cover the commodities futures. Okay, thank you guys.
Thank you, Leonardo. It's a pleasure to speaking to you all, guys. Good afternoon. My name is Ricardo. I'll be covering B3's commodities futures, and specifically, I'd like to talk a bit more about our corn futures contract. So right now in B3, we have 6 different contracts for commodities. By the end of the year, we'll have around 7 contracts. Most of them are agri-related commodities, so soft commodities, grains, and oil seeds. So you have a corn contract, live cattle, hydrous ethanol, Arabica coffee. We will be launching a Robusta coffee contract as well by May 24th of this year. And also we have 2 soybean contracts. One, Santos is the major part that sells soybeans overseas. So we have a local pricing for soybeans, and we also have a mirror contract with CME that you can trade the mini soybean contract in B3. So the mini soybean contract trading in Chicago, you can also trade it in B3. So one point that I would like to highlight about our commodity portfolio, most of our contracts are cash settled instead of physical delivery, which is the standard practice for agricultural commodities worldwide. And that's very specific to Brazil, and that's very helpful for non-resident investors, PTGs, who don't want to carry the risk of going to a physical delivery process. It's all financially settled at the end of the day. So going a little bit more in detail for our corn contract, it is currently the most traded commodity contract in B3. It is trading around, currently is trading around 25K contracts per day as ADV. But first, taking a step back and looking what is the physical corn market in B3, because since we're talking in B3 in Brazil, since it is an agricultural commodity in Brazil, it's an agricultural powerhouse. Brazil is the third world's largest corn producer, so around 140, 137 million tons. We are the largest corn exporter. Since last year, we started exporting to China, and the volume has keeps on growing. Production in Brazil grows a lot. It is growing at a very fast pace, especially in corn and soybeans as well. I think are the largest crops that are growing. It is a very important crop for Brazil. Currently, it is still there's a massive domestic consumption. That's why we have a very strong contracted prices Brazilian corn, but exports keep on growing, especially with Asian demand growing for feeds, for live cattle, hogs, chickens. It is the main consumption for exported corn. And that's how it became one of B3's most traded contracts and how it became B3's most traded commodities futures. One other very interesting feature about corn that we also, besides futures, options, and calendar spreads, the rollover, we also have a corn ETF. So B3 launched 2 years ago a corn index, and now we have an asset manager for Banco do Brasil, which is one of the largest retail banks in Brazil, which has a very important role in fomenting and financing agribusiness in Brazil. They launched also a corn ETF that tracks our futures. So that's a very interesting product as well. If you don't want to trade the futures, you don't have margin calls, but if you still want to have some participation in the corn pricing, you can track the ETF. It has some very interesting also broker incentive programs and marketing making programs that I'll speak a bit further on. Speaking a bit of one of the specs of our futures contracts, so standard yellow corn, It is quoted in BRLs since we are tracking Brazilian demand, Brazilian consumption, and Brazilian production. It is quoted in BRL per bag, so no bushels here. If you trade corn in CME, for example, we do bags in Brazil, we don't do bushels. One standard contract is around 450 bags of 60 net kilograms. If you put it in a notional, currently a USD would be around 5,000 USD one contract. We have settlements in January, March, May, July, August, September, and November. Currently, the key maturities for corn or March and September, especially September, is the one that holds most liquidity, is the one that we open the first when we are going to the further years in the book. It expires every the 15th of every settlement month. And again, since it is a financially settled contract, it tracks an index. This index is calculated by the Federal University of São Paulo, the state where we are in. Is a very renowned federal university, very strong background in agriculture. They hold one of the best worldwide courses in agribusiness that you can find. And we have a partnership with them where they calculate an index on the spot market. And we simply do an average of the last three publications of that index to settle any open financial positions on our corn contracts. And the same goes for the options as well. If you could move on to the next slide, please. Here we have some more statistics as well as some information on our marketing making program. So our marketing making program, we currently have 5 slots, but 4 of them are already occupied. We do have a stipend for anyone interested in joining our marketing making scheme. So we share a pool of 105,000 BRLs per month. So that would be around currently almost 20K per person per firm joining the program. You have to track the main maturities of the futures contract as well. You can get an added bonus if you also trade the rollover, the calendar spreads. But looking into the statistics of the contract itself, we saw a major jump as Henda spoke about a bit in the early. Since the pandemic, we saw a major increase in volume, both in open interest as well as ADV. So we closed 2023 on an average of 18,000 contracts, but currently in 2024, you already saw a massive increase, especially since we redesigned our marketing making program. So we're more around the 24, 22K ADV, including futures and options. One other thing that I would like to highlight for corn products and for commodities overall in B3, you have a very large share of retail investors. It is, I don't know how clear it is to see, but it's the dark gray one. So for corn, it's around 41%. So there's a lot of retail investors, a lot of day trading volume. So if you're a PTG and want to trade against retail flow, it's a very interesting product as well. You obviously have a great share of commercial investors. That would be the dark blue one, around 17%. So your major trading houses, co-ops doing their hedging. We also have around 30% of foreign investors, and those will be mainly market makers. We also have some PTGs, which are currently not market makers, but also doing some very interesting strategies with our corn futures against options, calendar spreads, and whatnot, and even doing some arbitrage with different corn contracts listed worldwide. And also talking a bit more about strategies, as we've mentioned, we do have a corn ETF that tracks our futures. So it's a very easy and very simple strategy to do some arbitrage between the ETF and the futures itself. There's a very interesting opportunity. And also we have calendar spreads, which are very liquid worldwide in commodities market, is very important too. It is something that we are willing and wishing to develop further on in B3, especially for commodities. So you could also be doing some arbitrage opportunities between our rollover screen, the calendar spread screens, and the future screens, which gives a lot of a low risk, low exposure. If you don't carry on a big corn futures exposure, you can offset your positions in the rollover and get some tick sizes on the trading. So even to keep on our schedule. I think that's what I wanted to cover for our current futures contracts. If you have further questions, I think we'll be holding a Q&A shortly. Thank you, guys.
Yes, guys, thank you very much. Just before Lenny start asking us the questions, I think she will do so. Let me just say that we left our email, our contacts over there, so that you can take a look. And if you need anything, just send to us. We can arrange it. Okay. Thanks. The audience asked for some colors about the S&P 500 in terms of general numbers, and Renato will bring it here. He'll share the screen probably.
Yeah, sure. So regarding the S&P 500, we have some products here that is basically exactly the same products that are traded at CME. So here we can see that we have like actually two main contracts. We have one that is the standard contract of the future in S&P 500, which has a point value of 50 US dollars. And also we have the micro S&P 500, which has a point value of 2.5 US dollars. So basically, standard contract is 20 times the micro future contract here. And also we saw a development in the liquidity of these contracts since the ending of the pandemic in 2021, actually. And so we saw here the volumes starting from 7,000 contracts in 2021 in the micro S&P 500 and going to 23,000 contracts in last year, actually. And also in the standard contract, we saw volumes going from 1.3 thousand contracts from 2021 to 1.7 thousand contracts in last year. So we saw this development in terms of liquidity and also in terms of breakdown of investors. We have mainly the participation of retail investors, the non-resident investors, and also some institutionals. So the main investors here that we are seeing is retail and non-resident again, and it's pretty much what we showed before in terms of the Ibovespa Futures contract. So mainly is the same kind of distribution when we do the breakdown of investors. I think this is a general overview, but of course later you can we can share more materials and some figures and graphs to you guys, and so feel free to ask us, and we will send to you.
The audience asked about the variation margin for the DI1 and then how the P&L is calculated, and the audience sent us as well an example saying if I buy one lot of DI1 July 24 at 10.45 and settle at 10.454, what is the P&L? And Leonardo is here to help us out with this question.
Okay, guys. So first of all, regarding the variation margin, the margin call for DI futures depends on the maturity you're trading. It can be around 5% of the notional of all the amount of your position, but if you're trading a very short maturity, it's around 5%. However, if you're trading a very long maturity, if you're carrying a position in a very long maturity, you have more risks. So it is around 20%. So it can change from 5%, then 20% for a very long maturity. We can send you a table with all the maturities and all the margins of the maturities, and will be more easy to clarify, okay? Because it depends on the maturities. The second question is related to the P&L. Okay, I'm gonna show you a formula just to facilitate the understanding. So to calculate the P&L, as I told you, the contract value at expiration is 100,000 BRL, 100,000 reais, and the contract is traded at the present value. Okay, so to find the amount, to find the notional you're trading, the first step is to bring the future value to the present value, and to bring to the present value, you basically use this formula. The N here is the number of business days to the expiration. This is the reason why the period you're trading is very relevant here at the DI future trading. And the rate here is basically the rate you traded. Okay, so in a simple example, if I buy regarding the second question, okay, the July 24, I don't know exactly how many number of business days we have to July 24, but it is around 60 business days, I think. 79. Okay, so we put 79 in this N, and we put the rate you traded in the rate variable here. So if I buy 10%, I put 10% here, and if I sold 10.5%, I put 10.5% here. The difference of both notionals, the difference of those two amounts, will be exactly the P&L you have. Okay, so we have basically two components here that is relevant to find the P&L or to find the DV1 of DI future. Okay, the rate you're trading and the number of business days till the expiration.
Okay, Leonardo, thank you very much. Actually, we are preparing a spreadsheet that will explain to all of you how to do this more deeply. And then, of course, we can share with you, Eddie. I just saw your message here, but we'll send to our In Future Singapore team as well so that they can share with everyone else. Feel free to send any questions to us. We'll send this material to all of you guys. Our contacts are in the end of the presentation, so we'll be very open to schedule conversations, to talk about any doubts, to go deeper into any specifics. Okay. Well, if you don't have any further questions, thank you very much. It was a real pleasure. And like I said, we are at your disposal. Okay. Thank you very much.
Okay, if there are no further questions, we would like to thank our speakers once again for their sharing, and we hope all of you had a fruitful session today. Do follow Orange Future Singapore at our social media channels for our latest updates, and we look forward to having you again at our next webinar. Thank you, everyone, and see you next time.